If you've ever looked at a chart and wondered where the big money is actually trading, then this video is for you. Today I'm going to give you a full beginner walkthrough of Volume Profile, one of the most powerful tools professional traders use to understand price acceptance, support and resistance, reversals and breakouts. By the end of this video you'll understand what Volume Profile actually is and how to read it properly, the most important levels and how institutions use them, and a simple strategy beginners can start using immediately. So let's get into it. Most traders are used to seeing volume at the bottom of the chart. That tells you when volume happened, but Volume Profile tells you something completely different. Instead of displaying volume over time, it displays volume at specific price levels. That gives traders a huge advantage because you can instantly see where buyers and sellers agreed on value, where institutions were active, and where price is likely to react in the future. Think of Volume Profile like a heat map of market interest. The larger the volume at a price level, the more trading happened there. The smaller the volume, the less interest the market had there. The value area contains around 70% of all traded volume. Inside the value area, you have the value area high, which is considered premium, the value area low, which is considered discount, and the point of control. These levels are extremely important because they often act as major reaction zones. Point of control, or POC, is simply the price level with the most traded volume. This is considered the fairest value by the market. Price is naturally attracted back to this level because so much business happened there. A lot of traders use the POC as support, resistance, or a magnet for price. High volume nodes are thick parts of the profile where a lot of transactions occurred. Price often slows down or consolidates around high volume nodes because lots of business occurred there. Think of them as magnets. Low volume nodes are the opposite. These are areas in price where volume is low and price can move aggressively through. Think breakouts, fast moves, and momentum. Now that we've gone through the different levels, let's talk about how to read market context using Volume Profile, and here's where beginners usually make mistakes. They mark out every level, but they don't understand context. Volume Profile is about understanding whether the market is accepting or rejecting price. Price moves from balance to imbalance, balance to imbalance. In a balanced market, price will move sideways. That means buyers and sellers agree on value. In these conditions, price rotates between value area high and value area low, so you should look to fade the extremes. Shorts from the value area high and longs from the value area low. If the profile starts shifting higher or lower, that means value is migrating and moving to a state of imbalance. Institutions are accepting higher or lower prices. That usually signals trend continuation. This is why Volume Profile is so powerful. It tells you not just where price is, but how the market feels about price. Now let's put this into an actual trading strategy. This is one of the easiest Volume Profile setups beginners can use. First of all, you're going to use the fixed range volume profile. So you can either search for it in the indicators, or you can come down the side toolbar and go 1, 2, 3, 4, 5, and you'll find the fixed range volume profile here. Here's the settings I use. So row size will be 1000, value area volume 70, and rows layout number. You'll then mark out the previous week profile, previous day profile, overnight, and the current session. Previous week from Sunday 6 PM all the way through to Friday 4:59 PM. Previous day 9:30 AM to 3:59 PM. Overnight session is 6 PM all the way through to 9:29 AM just before market open. And then current session starts at 9:30 AM onwards. For the previous week, previous day, and overnight, you would use these settings, and then for the current session, you would just tick this box to extend the profile right. Focus on overlapping levels and how the different value areas have moved in comparison to previous sessions to build context. Look at whether the developing session profile is above or below the previous day's value area and how have the different session POCs moved. This will tell you which direction is more likely. If volume is built above the previous day value area, that is bullish. If volume is built below the previous day value area, that is bearish. Are there any overlapping overnight and previous day levels, for example? This usually increases the probability of a reaction from that level. The first setup is a value area rejection. Price moves below the value area low and immediately rejects back inside. You can buy, targeting the POC or the value area high. This works because the market attempted lower prices and rejected them. That often traps sellers. The next setup is a value area breakout. When price reaches a value area high and breaks out, watch for acceptance above the value area. You can then enter long on the retest of the value area high and stops behind the POC. For even higher probability trades, you can combine the current session profile levels with previous session levels, such as previous day, previous week, and overnight. Volume profile is one of those tools that completely changes how you see the market. Instead of guessing, you start understanding where real participation happens. And once you learn to read acceptance and rejection properly, charts become much clearer. If this video helped you, make sure to like the video, subscribe, and I'll see you in the next one.